Morning, everyone. Hello, and welcome to today's Forex session. Thank you so much for your patience. Not only did I manage to blow David's eardrums out with my with the volume on my headset, then I managed to start and stop the webinar. So it's a great start as usual from a webinar technical point of view. Anyway, before we start, can I just draw your attention to the disclaimer that I pretty certain you can see on your screen. As you know, this is a very risky business, so please don't ever use money that you cannot afford to lose. Right, let's just get that out of the way. Right, brilliant. In fact, no, let's just pull it up again for a second, because I just want to, it actually is, the slide that I want is this one here. Brilliant. Okay. As someone commented on the in the chat, it is another momentous day here for the UK. Obviously, another Brexit vote. But then, as Alex said, it's always a momentous day here in the UK for Brexit. But it's actually a very, very valid point, because this week we've got Brexit, but it's also a hugely important week for all sorts of other reasons. Tomorrow we have the FOMC, and this one event really has coincided at a time when not only markets are going to be really listening out for what Powell is going to be saying, particularly on what's called the tightening, the QT, quantitative tightening, or the reduction of the Fed balance sheet. But it's the start of a new format for the Fed. The usual format was obviously the release of whether they were going to raise interest rates, and then there'd be a statement. But now we have a press conference. There was a press conference last month. This is going to be a regular event, pretty much along the lines that the ECB do, whenever they have a decision. And I can't overestimate the importance of this press conference and statement, because markets have been very, very volatile. As you know, before Christmas they went down, then they've been going up nicely in January, and they're just at that point. And you'll read everywhere commentators are saying that what he's going to say tomorrow is going to have a huge impact across the markets. Now, as Forex traders, you say, well, what's that got to do with me? Because I'm just looking at a chart and I just want to find a trading opportunity. And the reason it is so important for you as a Forex trader is, first of all the markets are interrelated. They all have these cross-market relationships. Currencies represent risk. They represent safe haven. Money will go into the currency and currency pairs. It's about the money flow, and what determines where that money flow is going to go is going to be about sentiment. And we can find evidence of what market sentiment is, not only in what we see happening on our charts, but also what is happening in the other related markets. So what is going to happen in the stock market is going to impact the Forex market and impact those currencies that are perceived as being more receptive to risk, if you like. So when the markets are in risk on, in other words, they want to take on more risk, those currencies will perform much, much better. For example, the Aussie dollar. And the reason for putting up the complete Forex trading library up is all this is now detailed in this box set that we've put together and is available on Amazon. It's the technical analysis based on volume price analysis. You've got the 3D approach to the Forex market, because it explains all this in great detail. You have Forex for Beginners, which is the VPA for Forex, and the worked examples book that make up the 4-box set. And I have to say, we're really very proud that it's been selling very well, and it's $9.99. So I'm going to stop there, because, as I said, I've got some things to also talk about bias, also the time frames that you're looking to trade. David's been looking at some very short-term faster time frames this morning, some moves, very nice moves in the Euro Canadian. I have a personal decision to make, because those of you who come along regularly will know I tend to put a basket of trades on together, around anywhere between 3 to 5 pairs, usually 5 pairs. But my decisions as to what I choose to enter in are very much going to be influenced by the broader market landscape, and in particular tomorrow's FOMC. And the decision I have to make is, well, do I look at my charts and put my little basket on to before the FOMC, or do I wait until the FOMC and let all the dust die down? So very different trading decisions that have to be made depending on the time frame that you are looking to trade and how long you're looking to hold the trades for. So I'm just going to pass over to David, and then we'll look at the charts. Sorry, dear.
That's all right. Thanks, darling, and a very warm welcome to you. Both I can see we've got quite a few regular visitors to come along to this session, and also some new people as well. So a very warm welcome to both of you. If this is your first time coming along to us, we do run as a two-hander between Anna and myself. Primarily on Anna's on. Are you on MT5 or MT4? You're MT5. Anna's on the MT5 platform, which is the sister platform to MT4. It's a multi-asset version of MT4. So if you're familiar with MT4, MT5 is not really a great step up in terms of understanding the platform, but it does open up a whole array of other markets, all the associated markets. You've got commodities, you've got indices, you've got stocks. And in addition to that, it also gives a much bigger array of time horizons. You can see them down the left-hand side there. MT4 can be a little bit restrictive in that sense, but certainly MT5, you've got a much broader array of timeframes to choose from. It's one of the many different aspects of MT5 to MT4. I've got NinjaTrader running on my side, and I've also got the TradingView up as well, which can be run on, not all the indicators there, but I've certainly got it running here, run on virtually any machine, or run on Mac, run on iOS devices as well. So I'll pull that up too, and I've got the pound index running on TradingView as well. If you have any questions, please just drop them in the chat box. Happy to answer them there for you. If they're short ones, if they're longer ones, we will answer them on air for you. I'm going to pass back to Anna, and we will flip-flop between the two systems. So just passing back to Anna now. You're just using one of the features on MT5. I think it's on MT4 as well, which is docking, where you can undock windows now, which is a relatively new feature, which allows you to move them between screens.
Yes, basically with MT5, which you can't do with MT4, is you just have this feature, you just hit docked, and then what that allows you to do is to move the chart out onto my second screen, which I have over on the other side, but I'll just move that back here. And the reason I've got this particular indicator up, this is our heat map, because as I said, I have to decide which of the 28 pairs I'm going to be looking to trade in. I'm wanting to hold these positions not longer than on an intraday basis, certainly not minutes and hours. And I use this indicators to really tell me, you know, what's happening in terms of the ranking of the 28 pairs. And obviously the thing that strikes us first of all is the strength that we can see in the British pound. As we can see here, it's been very heavily bought against the Aussie, the CAD. Cable is only on spot 3. We've got the Swiss, yeah, and etc. And obviously euro pound is going the other way, because it's inverted with the sell of the euro and a buying of the pound. And this is the beauty of this indicator, is that it just highlights the charts for us just to go and have, you know, just go and see, go and examine the charts, and it just saves an awful lot of time looking at the 28 pairs individually. But as I said, the most striking thing about the heat map at the moment is the extent to which the British pound is sort of dominating, if you like, these the 28 pairs. And the decision is, because we have this vote today in Parliament, what do we do? Do we wait until the vote is over, or do we say, yeah, it's being bought? Why is it being bought? Is it being bought because actually there is that she is going to be defeated? And you think, well, why is the pound being bought but against such a sort of negative view of the Brexit negotiations? And it's partly because if there is a delayed Brexit, or there isn't a hard Brexit, things are going to be spun out a little bit longer. There isn't going to be this crashing out on the 28th of March. That is, the market takes that as a positive, and it sees it as a reason for buying the pound. But like everything else in this particular market, particularly the Forex market, which is really the market that is characterized, I think, the most by mean reversion, what goes up has to come down. There is no bias in the Forex market as we have in, say, the equity markets, where the bias is really to the long side. I know you can short stocks, but realistically, if you're buying stocks, are you buying them, because, you hope they're going to go down? Of course not. So the mindset of an equity trader, of an equity investor, is going to be very different to the mindset, if you like, of someone who is approaching the Forex market. And as traders, we do have biases. We come in and we say, especially to do with the euro. The euro is, why is it so? It should be sold. It's a currency that shouldn't succeed because of all the problems associated with us. So we have to be aware of the biases that we bring to the markets. But with Forex, it is mean reversion. So we know what goes up has at some point will come down, and it's the point at which, and then it comes down to timing. Looking at the charts, I'll be looking at the slower time frame charts. I've got the daily here. I'll go right up to the monthly, and we can see here, what am I seeing in terms of pattern? What am I seeing in terms of volume? Am I seeing an accumulation perhaps phase starting? And that will help me make my decision, because I'm going to be holding this position for longer term. Now, in this, in the candles, on the daily candles, those of us on the faster time frames, you will take the opportunity as it presents itself to you. Yesterday was a down day. You would have been selling the pound. Today, is it going to be another down day? You just, you approach it with an open mind. Is there anything else you want to say to that, David?
No.
Do you want to come over to your Euro account?
Yeah,
and as I say, while I mull over what I'm going to do about what I see on the heat map. And by the way, I will go through every single one of those 28 pairs, judging by what I see on the heat map, and being aware of what is going on from a fundamental perspective, market sentiment. The decision is obviously chart based, but also in the context of what is happening in the markets as well. But we're just going to go over and look at what David's been looking at this morning on NinjaTrader, particularly with the Euro Canadian short-term trading, and also, as he mentioned earlier, looking at the pound index. We have a euro index, a yen index, and the dollar index available on our quantum trading tools for MT4, 5 and NinjaTrader. But on TradingView, we've managed to develop one for the British pound. It is something that we will be adding to the other platforms as well. And those of you who have the complete package, it will be automatically added to your package. It's one of the benefits of investing in the full suite of quantum tools. Whenever we develop a new indicator, it's automatically added to your package. So you just pay us once for the complete package, but you can buy the indicators individually as well. Can I move over?
Just switching screens, you should be able to see that coming up any minute now. Has that come up on the screen? Yep. Okay. I've got NinjaTrader, but I've also got TradingView running in the background as well. So I'll pull that up too, because there's some interesting things there as well. Also, just highlights the indicators there also. I've been following the Euro CAD this morning as we move through from Europe into London, and we've had some nice strong moves in terms of that particular currency pair. But just scroll across the top, we've got the 5-minute top left, we've got the 10-minute, and we've got the 15-minute over here. And then moving to the bottom row, we've got 30-minute, we've got the Renko running here as well in the middle, and then over to the daily. And in fact, this was one that Anna was short this pair for some time last week, I think, or the week before. And just to pull up the daily, that's where we are right now. No surprise to see the congestion building. We're trading around the volume point of control here. The trend monitor is still bearish, but you wouldn't expect that to transition for the time being, but certainly in the next sort of day, maybe day or two, that may well transition through to a darker color if we're going to see a true reversal. But it's no surprise to see this move coming to an end, given the amount of volume concentration in this region, given the fact that we've got the volume point of control, which is the pivotal point of the market, the fulcrum of the market for this pair at the moment, down at 1 spot 51. And in addition to that, you've also got a heap of price-based potential support. You can see the amount of price that's sitting over here in this region. There's a lot of it. And these levels here just simply describe the depth of that price support, which has certainly come into play already in this region here, just above sort of 150, 70 odd. And it's bounced off that several times already. So lots of reasons that you're expecting, certainly at the very least, congestion, which is building and may continue to do so. And obviously what we're looking for as a longer term reversal trader is a potential reversal. It may well continue in trend lower, but given the amount of price support that's acting over here, it's going to take a ton of volume to drive through that on a longer term basis. In terms of the move this morning, this is really what we've been seeing this morning. Very strong move. This is 7 o'clock. This is coming out of the Asia Far East markets here into Europe. Volume starts to pick up as we move into Europe, and then London gets underway. And as always, as is often the case, we start to see volatility appear, pick up in volume, volatility, and the potential for reversals. And in fact, that's classic in terms of the pound. And really, when you look across the time horizons, and again, it's another facet of using multiple timeframes, which is so important. If you look down at the 30, for example, we've seen a strong move. This is 7 o'clock here. This is 8 o'clock. Very strong move. We've got volatility here. We had volatility here as well. This one traded inside. This one followed through, but now we're starting to see a trade back inside that particular candle. So when the volatility comes in on a slower time frame, it gives you an instant heads up in terms of your faster time frames as to what may or may not be happening, and indeed, more importantly, why it's happening. So that's what you're really seeing across the pair, across the time horizons. And it's really reflected across all of them. You've got it on 15 as well. Got volatility came in, a little bit of a follow through, but look at the drop off in volume. Volume's falling away. And now we're starting to see a pause point. Now, this may continue higher, but for the time being, we're seeing a pause. We're seeing a move into congestion. And really all of that's reflected. In fact, if I go over onto the TradingView screen, which is probably the most interesting, this is TradingView. The beauty of it is it runs on pretty much any device. You can run it on mobile. You can run it on Macs. You don't need Windows, so you can access it from anywhere on pretty much any device, I say Android as well. Not all the indicators, but what I've got here is I've got the currency strength indicator, and I've got it on different time frames. The one on the left is on 10, the one in the middle is on 20, and the right-hand side is on 30. And again, with TradingView, pretty much the same as MT5, you've got a much, much broader array of time horizons. In fact, almost pretty much the same you would get on NinjaTrader, where it's limitless almost. And what we've seen here is this was the move, and this is another facet of using multiple time frames. Here we're using multiple time frames on an indicator, on the currency strength indicator itself. And what it's telling us, you might not be able to see this, the euro is the orange line here at the top. And we got up into this, didn't quite get into overbought, but nevertheless we were up at the top of the indicator, and we're starting to roll and starting to see selling coming in on the euro. And on the equivalent, this was this very strong move higher. So we had strong buying of euro, strong selling of the Canadian dollar, this purple line, which you might be difficult to see, but it's down here, I can assure you. And it's just starting to rise. And that is why we are starting to see that pause point and potential reversal. Bear in mind, this is on the 10 minutes, so we're on a faster time frame here. If we go over to the 20, what are we seeing on 20? Well, a similar sort of picture. The euro strength is starting to flatten, as indeed is the Canadian. It's all starting to flatten off down here on 20. And if we go right the way over to 30, there's not a great deal of change on 30 for the time being. But if what is going on 10 is going to be reflected over onto the 30, in other words, it's a true change in trend, a full-blown reversal, in other words, and not simply a pause point in a longer-term trend higher, then what you're looking for is this change in sentiment here to be reflected here and ultimately to be reflected over here. And of course, if it is, then what you're going to see on the 30-minute is a complete reversal in sentiment from bullish to bearish. And that's what you're looking for the whole time. And it really does just encapsulate and highlight this concept that you have to focus on the time frame in which you are trying to take pips out or points out of the market, because rest assured what you're doing in one time frame, whether it's ultra fast, whether it's a reversal, whether it's a longer term trend in a slower time frame, there will be something opposing going on in a different time horizon. And it's really just, I can assure you that there will be people who are short on this fast time frame here, on the 10-minute, for example, probably even the 1-3-5-minute. They'll be shorting the euro CAD right now. And equally, there'll be people over here on the 30-minute or on the hourly who are simply looking at that from the perspective of, well, it's awfully interesting. You know, we're seeing a bit of a pause point, but I'm actually long this market for a different time horizon. And really, that's all it comes down to. It's just establishing your time frame, your window of opportunity, if you will, and focusing on that and not a lot else. You can be all things. You can be a scalping trader, you can be a swing trader, reversal trader, trend trader, whatever it is, and have many different positions running. But it's just having clarity of thought as to what it is you're focusing on that particular position at that particular point in the market. Now, the other interesting aspect of that, that's obviously going on there. But if we move to the British pound, which is the yellow line, again, we talk a lot about these in these sessions. Reversals come for many, many different reasons. News, geopolitical events, statements, whatever it may be. But again, a classic is when you get into these crossover periods where you're moving from session to session, and you see it so often, and we've got it in the pound. This is, and again, a nice thing with TradingView is that you do actually see the correct time for your location. So this is 8 o'clock here where my cursor is. This is 7 o'clock. Exactly the same as NinjaTrader. It can be a bit of a pain on MT4 and MT5 because generally they're running sort of a couple of hours or 3 hours in front. So it's quite hard to pick off those points at which you want to look at, what happened here at the London Open, etc., etc. It's very easy with TradingView, very easy with NinjaTrader as well, because you get real time printed at the bottom and locked to your local time. So this is 8 o'clock. Up until that point, we'd seen pound selling. Now what we're seeing is pretty strong pound buying. And if you were buying the pound, if you wanted to trade the pound, you're pretty much spoiled for choice. You might, for example, look at the euro pound. You might look at the pound yen. We've got this very strong crossover. We've got strong buying in the pound here. We've got equally strong selling in the Japanese yen. So without even looking at a chart, I can tell you there's a decent trend going on in the pound yen. Equally, you could look at pound dollar. The dollar is the red line. That's falling quite strongly at the moment and counterbalanced by strong buying in the pound. But what's interesting is really it does highlight this whole issue of using multiple time frames, not just in the charting approach, but also in the indicator approach. Because what you're seeing here on 20 is reflected and mirrored exactly the same and right the way out to 30. So what it's telling you is that across the faster time frames in inverted commas out to the 30-minute, and indeed if we have the 60-minute, you'd start to see that reflected there as well. This is strong buying. it doesn't matter so much why it's strong buying, but you're seeing it, and you're seeing it reflected particularly from the session crossover where we had strong selling coming into the market. As London gets underway, we're starting to see strong buying, and that's reflected across this time window. And more importantly, it's very strong because what the angle of inclination on the currency strength indicator tells you, it tells you that strength. So the steeper the line, the stronger the buying or the selling. And it really is just the starting point for any analysis. Of course, you're not going to take a trade based on this, but what you are going to do is you're going to decide which pairs you're going to look at, which ones are moving strongly, which ones are not moving strongly, and then go off to the chart and take a view as to, whether that is a trade you want to take a position in. Are you going to jump into this trend? Because again, it's a decision you have to make. When the euro CAD back here was kind of climbing up to this region, the euro was up here and the Canadian dollar was down here, then you might consider that as a reversal opportunity. And indeed, that's where my eye is always drawn on the currency strength indicator. It's always going to those extremes. I'm looking at the New Zealand dollar, for example, this grey line, very strongly overbought, very strongly overbought, very strongly overbought on 30. So I would have my eye on that, because what I'm looking for is to get into a reversal position early and take advantage to maximize any trend that subsequently develops. Now, given that the New Zealand dollar is not moving lower at the moment, it's just oscillating around this region. It's climbing here still, and it's climbing as well on 30. I have to be patient. I have to get into a position, but I've got to accept the fact that if I'm going to take a position on a reversal, I have to set my stop loss wider, because I've got to allow for the fact that a currency may stay overbought and oversold for some considerable time. It's not just going to roll over and deliver the goods for me because I happen to have taken a position in the market. So it's always a balance. It's always the payoff is the more risk you're prepared to put on the table, then the greater the reward. The smaller the risk, the smaller the reward, because if you're going to jump into this trend, for example, if we jumped into the pound yen, for example, right here now, that's trending nicely. Our stop loss could be relatively tight, maybe even a few pips here, maybe 5, 6, 7 pips, something like that, pretty tight, because the trend is underway. The momentum is already driving into that market. Very strong buying of the pound, very strong selling of the yen. So jumping into that position, you could put on a pretty tight stop loss. If you were going to jump into, for example, the New Zealand CAD, because the New Zealand is up here and the CAD's starting to rise, but the New Zealand hasn't yet moved. It's starting to show signs of it, but it hasn't done it yet. If you put a New Zealand CAD sell on the market, you've got to allow a much wider stop loss, maybe 15 points, maybe 20 pips, something like that, because this hasn't started to roll yet, and this certainly hasn't started to roll. But if it does, the benefit, the payoff to you is you're in early, and you maximize the profit from that particular trend, because other traders will be joining that move later. Once it's underway, smaller stop loss, less profit available on that particular move. And really, that's what it comes down to. You can see the New Zealand is starting to kick over here. It's already starting to kick over here. That's what you have. Now, I can't tell you right now, I haven't looked at the chart, but I cannot tell you with any certainty whether this is going to continue lower and roll all the way down for us nicely to the bottom. Same here, same here. I can't tell you that right now. This may well kick up again, may be here for some time, could be here for hours. That's what you have to be aware of, and you've got to be patient, but that's the reason you've got to set your stop loss wider. So you can see the pound rising very, very strongly. Spoiled for choice, really, as to which pairs you might want to trade on that. And I've actually got the, where are we? That's the wrong one. This is the one I wanted. Sorry, let's get that out of the way. This is TradingView. It is a fantastic trading, a charting platform. It's got so much flexibility. It really is very, very powerful. This is the pound index, and I've got this set on, where are we? That's on 5 minutes. This is on, what time have I got? That's on 10 minutes, and then at the bottom I've got 15, and over on the right hand side I think that's 30. So we've got a nice array of charts to consider. As I say, this is the pound index, and really that's just reflecting what we're seeing. We're seeing this very strong move in the pound for whatever reason, and again, it's just a nice way to back up what the CSI is telling you, and then of course you'd be off to look at the charts and see what's going on there. Just go back to what else we got here. This is the, where are we? EuroCAD. There we go. This is the EuroCAD, just to really put the CSI alongside the chart itself. And we've got the CSI on 15, and I've got the chart here on 3 minutes. So I've got a pretty fast time frame going on. And you can see here on the trend monitor, it's been rising. We get a pause point back into bullish, and now we're starting to see, we've seen the transition through into bearish. We've gone from the bright blue into the darker red, not gone into bright red yet. We can see the trend lines diving. And it just reflects the pause point in sentiment that we're seeing right now. And of course, again, you'd have this on multiple time frames as well in terms of the charts. Now you'd be moving to that. You'd be looking at the volume price analysis aspect, be looking at the volume down here. It really does present very well on TradingView in terms of volume. And you also get volume across all the markets, of course, as you would expect. Let's just drop that out the way and let's go back to Ninja. There we go. It's pretty much the same thing here. Let's just pop that open, see what's going on. Interesting in the move lower, we've got, you can see we've got the volume falling away a little bit on these last two down candles here. Trend monitor starting to transition, has gone into darker blue on the 5 minutes. We're still in bullish on 10, we're still in bullish on 15. And again, it's really just representing the fact that we've got the volatility candle here. And all we're seeing at the moment is this weakness, this pause point. And of course, going back to the CSI, when you're using it in not just the getting in aspect, it's also fantastic to help you stay in, because as we always say, if it's good enough to get you in, it's good enough to keep you in and also get you out. Because logically, if that market is going to move from one extreme to the other, currency is going to go from weak to strong. As Anna said at the start, it is the perfect model, the perfect market for mean reversion. These currencies move from overbought to oversold the entire time in all time frames. You are truly spoilt for choice in terms of the opportunities. Now, you may decide as a Forex trader that you don't want to trade all the pairs, and that's perfectly fine. In fact, a lot of customers, a lot of people we know, they will limit themselves to maybe 3 or 4. And even more so into particular time frames at particular times of the day, which is absolutely fine. Really get to know those currency pairs. But if you're indiscriminate, which I have to confess we are, we will trade any of these markets, any time frame, then the world is your oyster. There are advantages and disadvantages in both approaches. As I say, we can be indiscriminate, which really does open up many opportunities literally across the markets and any time frames. If you're more focused, again, that's a positive because you get to know those pairs. The disadvantage of focusing on maybe a handful of 3 or 4 is that if nothing's going on in those 3 or 4, you're always going to be tempted to move away and look for something else, look for a trading opportunity in another pair that perhaps you don't focus on very much. So it's really a question of how disciplined you can be as a trader. And if you've got that discipline, just to say, this is my trading plan, this is what I'm going to focus on. I'm going to be focused on 3 or 4 pairs. I may be going to only focus on a reversal tactic, or I'm only going to be a trend trader for those pairs. That's fine. Again, or I'm going to trade breakaways, breakouts. Entirely fine. You decide what you're going to do and how you do it. But everything comes with advantages and disadvantages. This was the move higher on EuroCAD. I've got this on the 15 Renko, which actually converts to 1. What that means is it's 1.5 pips. And this is generated automatically by the Renko optimizer on NinjaTrader, but it works in exactly the same way on MT4 and MT5, where the indicator actually delivers the optimal setting for you. Because like everything, markets move at different speeds at different times of the day. It's like tick charts. That varies enormously through the day. It's the same with Renko. You can set your Renko to 1.5 pip, 2 pip, 3 pip, whatever it is, but each pair will have a different characteristic. So how do you know what is the optimal? And what these indicators do is deliver the optimal setting for you. And then you are trading with the market. You're trading at the market speed. So if the market's fast moving, it'll give you a certain setting. If it's particularly sluggish, it'll deliver a second setting, a different setting. and it just means you're trading at the optimal speed of the market all the time. This was the move higher, and using Renko, which is a non-time-based chart, it's a great way to blend time-based charts with non-time-based charts, because what you see on a Renko chart is you see momentum of the market. When the market is moving fast, you'll see that delivered in terms of the speed these bricks build, because there is no time governing them. They're independent of time. The metric that governs them is how quickly this pair moves through 1.5 pips. Once that's completed, that's it, onto the next brick. So whether that happens in milliseconds or nanoseconds or half a second or a second makes no difference. That will speed up and slow down on the chart itself. We're seeing the bearish sentiment at the moment. We've seen it on the trend monitor. All the indicators, many of the indicators working exactly the same way on Renko charts as they do on time-based charts. So we're in bearish phase at the moment. We've got the pivots up here. We've got the trend dots, which are transitioning. We've also got this very heavy area of potential price support, which is acting as support right now. It's been tested. May see it tested again in a second. If that is breached, then we've got a very strong area of then price resistance, which is going to sit overhead. And in terms of the trend dots and the trend monitor, the trend dots will always transition first. You can see it here. We came through the blue phase on the trend monitor, transitioned into darker blue. But in terms of the trend dots, they've already changed color. That is how they work. They are very close to the price action, whether it's time-based price action or non-time-based price action. They will always transition first, but they work great with the Renko if you use it in combination with the trend monitor. Because what the trend monitor does is takes a more considered view. As you can see here, it starts to move into a darker color here, and then we're into red, and it's holding through red for the time being, whereas the trend dots themselves have actually transitioned back into blue. Now we're into gray, which is the transitional color from bullish to bearish, or bearish to bullish. Now we're back into the red dots again as we move down to test this level. We've got a pivot low formed there. But if this market breaks below, then we're looking at potentially a deeper move. And of course, you'd be backing this all up with currency strength indicators. You'd be looking at the volume profiles, all the other indicators, putting it all together. Just pop that out of the way. Can I pass back to you, Di?
Yeah, sure.
Let me just pass back to Anna just for a change of voice. Do you want to change screens as well?
Yes.
Yeah, okay, we're going to change screens as well. Bear with us a moment. Anna's struggling to find her GoToWebinar icon. Have you found it?
Yeah, I found it.
Okay. Just changing now.
Can you see it?
Yeah.
Right. You should be seeing a cable that we've got here, which has actually gone into a little bit of a pause while David was speaking. But if I just bring over the CSI, I've actually got the 12-minute CSI here, and David was saying the yellow line, as we see here, we've had some strong buying of the British pound, and the question is always, well, what is it against? And one of the reasons it's come to a pause point is this red line, which is the US dollar. As we can see it, that suddenly sort of turned a little bit. So if you like, the lines are looking to be moving in the same direction, and that is always a clue that the move that we see on our chart is possibly going to be going into a pause and a congestion. But I just wanted to explain the charts that I have on this particular profile for cable. I mean, I do have, obviously, I've got the dollar index here, which is it's a standard instrument that's offered by this particular broker. This is XM, so it's actually the version of the Dixie. Very few brokers actually offer it, which is why we've actually developed our own dollar index. But because I use this broker for these sessions, I take advantage of the instrument that's available. So that's down there. But what I've done is I've got my version of the Renko here, and you can see here this is the move higher that we've been seeing, and this is the sort of pullback pause that we're seeing at the moment, and it's here very well illustrated on the 3-minute chart, because this is against the US dollar. We're just going to go have a look at against the yen, because when we look at the CSI over here, we can see the pound is still rising sharply. The line is nice and it's a nice angle, but the yen, if we see here, is also at a sharp angle, and that's what we really want to see, particularly if we are in a position, because it gives us a degree of confidence. But this is the 3-minute chart for this pair, and what you need to go back to and look at, and this is what David was saying, is do you prefer to trade reversals, or do you prefer to look for breakaways? You know, what is your preferred trading tactic, as it were? And as always, you have to put moves in any forex pair in the context of the session, particularly when you are coming to a session crossover. And as often happens when we come into Europe and London, we have the usual sort of tricks being played by the major insider players. And what we have here on this 3-minute chart, this is that we had a very nice move lower. You can see here the volume is sort of below average because it reflects the time of day. This is 2 hours behind, so 9:27 is actually 7:27 our time. So it's just before the start of the London session. We had this strong move lower, then we had this volatility candle with a lot of volume underneath it. But because it was triggered with a volatility, the expectation is that the price is going to go retreat to within the spread of the candle, which it duly did, but it was also associated with high volume and with a wick to the lower bottom of the candle. So that is the first sign that possibly, if you were a reversal trader, these are the kind of candles that you would be looking for. And it's the next candle which is really the clincher, if you will, because we have a beautiful hammer candle with a lot of volume underneath it, and it really did sort of mark the start of this move higher, which we can see reflected in this trend higher. Now, lots of candles, lots of different candle the volume and price action combinations as we have here. We have nothing moves in a straight line. You have wicks to the tops of the candles with a lot of volume under that candle. Was that the first sign that this was going to be this particular move high was coming to the end? Well, you simply don't know. You can only judge it as the candle is being is developing and with the volume that is associated under it. But what it tells you, what VPA tells you, it gives you a heads up. It anticipates what is likely to be happening next. So this is a really interesting candle. We obviously had a strong move higher. It hit my 200 moving average. It was also approaching this line here, the volume point of control. So of itself, these two signals that we have, technical signals that we have here, as well as the wick to the top of the candle, it's going to tell us that we are going to have we're going to have a pause, possibly a bit of a struggle, a lot of volume trying to drive that higher. It didn't make it. It pulled back. Great, fine. But the next candle is the important candle, because yes, it did pull back, but look at the volume underneath it. If that was going to be a genuine reversal, as it were, that would have to be much, much higher to drive the price lower. So, we can say, okay, we know that's going to happen. We know that happens. And in fact, the move higher continued. Again, it was there was a temporary cap on the by the 200 and the VPOC. We're moving into an area of congestion. The VPOC represents that volume point of control. These shaded areas on the chart represent zones on the chart where price is going to struggle a little bit. So we can expect that to happen. The next candle comes along, a lot of volume underneath it, weakness to the top of the candle as well, but it did actually manage to pierce the 200, and also the VPOC also put a temporary sort of block on it as well, but it wasn't sufficient to move the price lower. Then this candle here, we have a little wick to the bottom. We also have a pivot, so there is price support coming in. Then the next candle, reasonable amount of volume, an up candle. But again, this 200, the VPOC, it is telling you that whatever happens, there is a little bit of a struggle. Then, if you had missed the reversal signal back here, then you're at this point here at the volume point of control, and this is where perhaps you, as a breakaway trader, would say, okay, it's at the VPOC. I know this is going to provide support. Is it also going to provide a potential entry? Or if you've entered here and you've managed to hold the position till here, you could say it's now looking, am I going to see a breakaway here? Perhaps you can add to your position at this point. And then what we want to see, we see reasonably widespread candles with volume driving in. We've got volume on this one. You also have to look at the context. You also have to look at, compare the volume bars with the candles to previous ones in the same session to say, is that it? Am I looking at a genuine move? Does this look okay? Does it look genuine? And that there with that spread, yeah, it's fine. Perhaps a little bit more volume would have been very nice, but certainly this one would give us more confidence. Again, we have another red candle here with a lot of volume, but we have a wick to the bottom of the candle, so we know there is price support coming in. Then we have more price support coming in here as well, and another outcome. And this is the first sign of weakness. This is a shooting star, the reversal of what we see at the bottom here of a hammer, and a reasonable amount of volume underneath it. And this is where you could at the time have thought, you know what, I think maybe if I'd got in here or I'd got in here, I think I'm a bit concerned about that because it is associated with high volume. And would you say, yeah, I'm going to come out? If you didn't come out and you say, well, I'll wait, I know there's a lot of volume underneath it. This is the candle here with a lot of volume, but a very compressed candle, which is possibly saying that, well, if it is going to reverse off this one, it's not going to reverse yet, because that amount of volume you would expect to see a much bigger down candle. You didn't, and in fact the buying came in again once again, and then we had another little shooting star. Not a lot of volume underneath it, I have to say, but enough to bring this particular move to a pause point. But we have to look at this price moves in multiple time frames, and also look at something like the CSI, because what we're seeing seeing in this combination of candles is what was happening on the CSI when the dollar was beginning to turn up as well. And this is the 3-minute chart. You're also looking at it, this is the 12-minute chart to give you context of what you're seeing on that chart. But more importantly, you would also look at it on a Renko, a non-time-based chart, because what the non-time-based does, it takes away the noise that you have on the faster time frames. And here we can see the pivot. We've also got a fractal here at the top here. We've had the change in the trend dots. We've gone into gray and an effort to rise again. Although this is still blue, we are beginning to see the dots change color on red. So taken together with the time chart, the VPA lessons that you can see on the chart with the non-time based chart, you could say, hey, this is fast. These are fast time frames. What did we do here? We were down at 31.33. We're up here, if we're taking it right, to 31.70. Scalping traders are only looking for a handful of pips, and if you have managed to ride this move higher, either coming in as a reversal trader or potentially coming in as a breakaway trader, you would have done extremely well, I can assure you. But it's still holding. What VPA does, it helps you hold your nerve, and when you use it together with something like a Renko, that's what it does. It takes away that fear, that sort of nervousness that we get when we have money in the market. And what I want to do is just go over to the pound yen, which is a much more volatile pair, but actually it has really been behaving in a much more smooth way, because with cable, It's, if you like, it's the move higher came to a bit of a stall because the dollar, there was buying coming into the dollar. There was still buying of the British pound, but that buying was much stronger. It was much smoother in the pound yen. And we have a very similar chart here. We have the beginning of the London session, very, very similar candle pattern. We have this was on the 3-minute. We had a volatility, then we had a little hammer candle, lots of volume underneath it. This is the, if you like, the trigger, your first trigger candle to say, do you know what, I think something is happening here. The next candle, not a lot of volume underneath it, but you know, I would say that was, it was okay. It's enough to you know, to say, validate the signal, as it were. And we'd be looking at the CSI as well. The next candle here, higher volume than that one, which is good, but a bit of a compression on that candle. So we can expect possibly some selling coming in. And also we're at the VPOC. The volume, don't ever underestimate these zones, these congestion zones on the charts, where always they're going to cap any move. Price is going to have to struggle, and it's really going to have to push through to move higher. So this is your first signal if you like reversal tactics. Then you're going into a congestion, and that's quite, you know, that's quite a long congestion before you actually see the breakaway, which was also reflected on the CSI. But it's really, if you look at the Renko really does, you know, that would have helped to not only get you in here with the blue dots and the trend monitor, but it actually keeps you in, because what you can see here on the pullback, we never get into red dots. We got grey. That's a little bit more congestion. We can see a congestion here, a little high move higher, a pullback here, and now it's carrying on higher. And these pullbacks and corrections are potential areas where you can say, you know, I missed that one, or maybe I can either get in or I can add to my position. I thought the pound yen, ironically, for one of the most volatile pairs that we have on our 28 pairs, actually has produced a much smoother ride, as it were, this morning. But it all started as going back to the start of the London session. So something that you really have to be aware of, these crossover sessions. If you're in a position, you have to think carefully, you know, is it going to come to an end? Or if you're not in a position, then, you know, look at these crossover sessions to look for potential entries and for potential trades. Now, the question is, well, where is it going? Where is this actually heading? I've got the hourly chart here, and it's actually moving away from, it's a classic breakaway trade, and we have the S&R indicators here, which highlight these areas where the price may be targeting. We also have an indicator called a Camarilla, where it gives some hierarchy to the levels, and the level here is 144.17. That's certainly you know, a reasonable objective. And let's move down to the 5-minute. Here we are with Camarilla. The values are, the daily values are correct, are refreshed every day, so you will get different values on the faster time frames as you do on the hourly. And as always, it's a question of confluence. If you see important levels on the faster time frames that correspond with on the slower time frames, you know they are going to, it's a hierarchy. It's a bit like Fibonacci in the sense that, you know, when you have those important levels that all traders watch, and it's just a way of giving, as I said, hierarchy to price levels that we see on the chart. We've moved off the R1, and between the R1 and the S1 is, we call a buffer or a neutral zone. In fact, the pound yen has gone through it quite quickly. Usually has a habit of congesting between these two levels. It's moved off the R1, gone on to the R2, that's the R3, These are actually 6 levels on here. So those are the, if you like, the levels that we'll be looking to target for this particular pair. And you would use these levels as targets, potential reversals, potential entries, and also to help you with your stop loss. So I'll just move that back to the hourly chart so we see where that's going. So I'll just put that. Anything you want to add to that? Yeah, sure, no problem. I'm just going to move back to David.
Just switch back very quickly before we wrap up. Just move that out of the way. Just wanted to go back to what I was talking about earlier on, which was the New Zealand CAD and the reversal. And as you can see, this is the 15-minute CSI. You can see the New Zealand dollar here starting to roll over, and that's being mirrored by a pickup in buying of the Canadian dollar. And there it is. You can see it reflected over on the 15-minute time frame. Trend monitor is starting to transition. Trend line is starting to dive down. And we're just starting to see it take effect. And if we go over onto the multiple CSIs, there we go. It's what I said before. You get into these overbought, oversold situations. That's the New Zealand dollar. That's falling away nicely. This is the Canadian dollar, which is rising nicely, which is why we're seeing that develop. We're starting to see that develop over on the 20-minute time frame. It's rolled over here. It's just moving away from the overbought situation and up onto 30. It's flattened off. It's stopped that strong rise. And similar to the Canadian dollar here, that's just starting to flatten off. And if this does develop into a nice trend, then this is going to be reflected over on 30. And really, it's just a nice example of getting into a reversal position, waiting for it to deliver, and now you're starting to see it deliver across the time horizons from the 10-minute out to the 30. Just a great opportunity. You've got to be a little bit patient. There's no guarantee this is going to continue right the way down to the bottom, so the New Zealand down to the bottom and CAD up to the top. But nevertheless, plenty of opportunities there. It's already 15 or 20 points of opportunity that's gone by. If you're waiting for this as a trend trader, that's gone. Can't claw that back. If you're waiting for this to reverse, go through the crossover point, for example, down here somewhere, if you're going to jump on the trend at that point, then all this move has already dissipated. It's gone. You can't claw it back. Those are the decisions you have to make as a tactical forex trader. Do you want to trade reversals? Are you going to trade trend? You're going to trade breakaways? How are you going to take this market on? But I just thought it was a really nice example. I'm going to pass back to Anna.
So we're going to sort of wrap up. Just to catch up on some of the questions. Yes, volume and price should always be in agreement. When they're not in agreement, you've done that. David, I believe, has answered that question. You are looking for anomalies, but anomalies will work for you as well, because if you see an anomaly in a move, it will either give you confidence. You say, yeah, it is an anomaly because that's what it is. It's an anomaly, and it will help you keep you in. Or you see an anomaly and you think, yeah, I'm actually going to come out. So it's how you apply volume price analysis, how you blend it into your existing trading tactics, into your existing strategies, as it were. That is the beauty of this particular methodology. This is what we believe. We don't say, it's our way or the highway. You can take elements of it, you can take the whole methodology, but it just allows you to look at the charts in a new way. The number of emails that I've had from people who said that volume has really, it's the missing link, if you like. They know all the technical analysis, they know how the indicators work, they can read candles, but it's the volume that really sort of completes the picture for them. And that's really, I've got to say. Anything you want to add to that, darling? That's that it. You've done all the questions. That's fantastic. And as I said earlier, the books, the Forex Trading Library that's up on Amazon, that's, we have traders who simply use that. Everything is there that we believe Forex traders need to know, the VPA, the fundamentals, how the related markets, how these markets all are intertwined, all we now, you can invest in our Forex trading program where we put everything together. And this is the site where you can find more information on this. Is quantumtradingeducation.com. These are the modules that make up the program, and it's about, let me have a look. I think I've actually got it here on my, tells me how many. There's about five core modules, advanced VPA, 50 hours of videos, because I'm asked this question, say, well, I've got the books, you know, why do I need the program? Well, you know, if you're happy with the books, stay with the books. If you can work, that's absolutely fine. But I would say the VPA module is advanced. It's really going back to first principles, looking at Wyckoff's 3 laws, a primary trend, secondary trend. It's a very, very detailed look at price action and volumes. 50 hours of videos, PDFs, and the beauty of it is you really learn at your own pace. And you do get all the indicators. You get the full package of indicators, and this is the cost: $13.91 for MT45, $16.94 for NinjaTrader. There are more indicators for NinjaTrader, but it does include the indicators and what the actual education, what it actually costs you. If you take just under $500 off those prices, that's the cost of the indicators. The actual education element is about $500. Going back to the indicators, and particularly the ones that David was showing on TradingView, this is the quantumtrading.com, which is where you'll find all the information, and we've actually revamped the site to make it easier to navigate. And you can see here the TradingView ones. And the TradingView ones here, the huge advantage is that they can run on a Mac and Android devices. Now, we have a lot of traders who have invested in some of the MetaTrader indicators and NinjaTraders and would like to add TradingView. If you have any of our indicators for whichever platform and you want to invest in maybe 1 or 2 of the TradingView or the full package, you do get it at a 50% discount. You don't pay, you know, the fact is you already invested some of the others. In fact, all the indicators, if you want to buy another indicator from the suite, so if you have a VPOC and you need a VPOC for another platform, you don't pay full price. You get it at 50%. The actual indicators, videos on the indicators are also all have been upgraded and put together on the site. This is the VPOC, the volume point of control. Everything is much easier to find on the site. We believe with videos, support pages, etc., how you would use them, just suggested ways. As I said, with the indicators, along with volume price analysis, it's what you do with them. It's you take them and you own them and you make them your own. We can only give you some examples, set out some suggestions, but it's ultimately Forex, you know, any kind of trading is you have to own it and you have to make it work for you. And that's the VPOC, that's the volatility indicator. Each indicator has its own page with, as I said, videos and support pages. Anything else you want to say, David? Or is that it? And finally, very finally, if you want any more information, then you can either drop me an email, anna@annacooling.com, or david@quantumtrading.com. We have gone over time, but all remains for me to say thank you so much for staying with us. I hope you enjoyed it. I hope you've learned something maybe that you didn't know before. We are actually back this afternoon where we're looking at the indices, day trading the indices with NinjaTrader. What?
We think. I just asked Melanie if she'd have a notification. She said she hadn't.
Oh, how bizarre.
I don't know.
Well, according to my GoToWebinar, there should be a webinar this afternoon, but we'll go and investigate that and see what's what. Anyway, otherwise we will catch you next time. Take care. Have a great trading day.